Hi, this is Joe. We're going to talk about the S&P, give you an update. I'm going to show why I think the action that's taking place here looks more important. It looks different than any kind of down movement that we've seen since the low that was made in March. So let's get into the charts because there's a lot to talk about. We're going to start with the monthly chart. Now, I think, one of the things I just want to point out is that it's early in the month. I mean, there's still plenty of time. It's what, the 11th, so it's not like we're near the end of the month or anything like that. But I think it's a factor just to recognize that there's a pretty big tail forming on this candlestick. It tried to push into this resistance zone, up in here, and it got pushed away. Now, this could be a short-term thing, and maybe it wants to push back down. I see some things taking place on other time frames that leads me to believe that maybe this could be a little bit more important and maybe not a short-lived type of decline. So let's go to the weekly. So as we look at the weekly chart, again, I want to zero in a little bit and talk about the price action. So before I get into the price action, let's talk about the MACD. So I mentioned several weeks ago the potential crossover of the MACD line, and I said that I didn't give it a lot of detail, but basically what I've been looking for is to see whether we were going to get a move up and then a retracement to form like a pinch play where the MACD would actually hold the signal line, or we do the reverse, which is what's taking place right now, is this rally right up to the zero line. So we never got a pinch play that really developed as a setup on this weekly chart. Instead, what happened is the red line just kept rallying up towards what I consider to be resistance on the weekly time frame, which is the zero line. So now, if we go and look at the price action, notice what's taken place. So we had the big reversal off the low, a pause week, and then another really strong bar to the upside. And then we had, more like continuation type movement, nothing real extreme until this bar here, which is a big, strong upward green bar. Now, notice what's taking place this week. Now, we only have a day left in the week. So we got the action for Friday. And the question is it going to remain as a reversal bar? Because essentially what's taking place is that you started right about the top of last week's bar. You tried to get above it very briefly, and now you're below last week's bar. So this would be considered, it's not exactly an outside reversal bar, but it's a pretty strong reversal bar. And I'll show you why as I look at the daily chart. So if we go to the daily and see this huge down gapping bar. And one of the things I thought I'd mention that I like to look at is to know how important a down bar is. I like to go back and count. So if we looked at where this was yesterday or the prior day, we took out 1, 2, 3, 4, 5, 6, 7, 8. Let's call it 8 bars, 8 closing bars on this daily chart with one declining bar. So I always look at it like if a stock has a bad day, I want to look at it in relation to all the days prior and see does it just take out one closing day, or does it take out multiple? And when I see multiple closing days to the downside, I usually view that as being a little bit more important. Now, we've had some of that take place in other days where we took out pretty decent amount of price action. Maybe not 8 in one day, but we did take out several bars. So I'm going to show you something else in a minute that is I think a little bit more important that's showing up. But first, let's take a look at the hourly chart. I like to go through all the different time frames. So first thing we're going to do is we're going to zoom out because I want to show you what's taking place from the low and what you want to constantly do. Now, you could draw the trend line from here, and you clearly broke that without any question. I wanted to draw this trend line in to show that you really are breaking the trend off the daily as well. So in one fell swoop, you're breaking the trend, the most recent trend. Let me zoom back in now. So, we're taking the most recent trend and breaking it, but we're also breaking the longer term one off of the daily chart. So if I look at it on a daily chart and I take this one off, so in one decline here in just a couple days, we broke the trend. Now, the hourly trend line is more accurate, so that actually isn't overrunning like it says or like it shows. If I show you on the hourly, we clearly broke, came down and touched this, came down and broke. So now where we are right now. So this is how I'm looking at this. If you notice, the ADX is making a pretty strong move, the blue line, and it's based off the sellers, which is this red line. And so that's the DI line that's red. Now, I've talked about this. If you watch any of my videos on the S&P going back for the last month or two, I'm consistently looking at the hourly ADX, and I'm looking for signs where the red DI is making a real turn, which again would be a sign where you make a strong move to the upside, but then on the pullback you hold the 25. Now it could be higher than 25. I like it to be somewhere near 30 though. I don't like it to try and make a reversal up at 40 or 50. But if it can come down, somewhere between 25 and 30 and make a higher low, then I would be under the assumption that we're doing something along these lines in price, where we're going to come up and test maybe the trend line and then turn down on a price basis. So if we get that type of price action to take place and confirmation on an ADX basis, I would feel very strongly that the bears have at least taken control to the downside. So I'm sort of on the opinion that that's really what we want to be on the lookout for. I do notice that, again, the MACD is clearly breaking the zero line. Both the MACD and its signal line are breaking zero. And if you notice, this happened here as well. And what we talked about at this point here was the RSI. So at this point, going back when this broke, it was oversold at the time. And if you notice what's taking place right now, we've got an RSI. I use an RSI 5 for this specific reason. I'm looking for quick movements of overbought, oversold. I'm not looking for some primo entry point. I just don't want to short into the hole. I don't want to short when it's a deep oversold reading. And when you have a 5 reading on an RSI 5, you're deeply oversold right now. So I'd be looking for, again, a move for this to work its way up back to neutral. It doesn't have to go way up towards 70, 80, or 90. But I want to see this sort of develop where it gets up to 50, 52, 53, and then starts to hook back down. And if we get that and, price does that pattern where it rallies up underneath the moving averages and turns down, I think we have a premium entry point for the short side. And that would be really the first time that we've had that. The last time this happened, we got too violent of a rally to the upside to really get any kind of a trigger. We never got that higher low on the negative DI. So that's really what we want to see taking place. One other thing I want to point out, I'm going to go to the TC2000 chart. And one thing I want to point out, I've got the link for TC2000. This is a very good program. It offers a lot of different things depending on what you're looking for. If you use my link, you will get, I think you get you receive a $25 discount on your first order. So just kind of keep that in mind. But let's look at this chart. Now, if you look at the spider, this is a daily chart of the spider. And what I'm noticing more than anything in this instance is the volume. So I've got the volume as color coded, which TC2000 allows you to do. And the way I've designed it is if it closes below the open, then the volume bar is red. If it closes above the open, the volume bar is green. And I haven't talked about volume yet. I haven't gone into this in any kind of detail, but I also overlay a 50 moving average of the volume. And if you notice, since the low, this is the first time we've had a red bar greater than normal, greater than the 50-day moving average of the volume. that crossed above that average. So this is the first time we've had abnormal selling volume since the low. And we did it in a full day. We did it on a day where you opened up basically at the high of the day and closed right near the low of the day. To me, this is just really strong criteria for real selling. We're coming into some support, what could be conceived as support. So again, I'd be on the lookout for some kind of retracement rally. I wouldn't want to short this deep sell-off, even on a short-term basis. We go back to the hourly. Again, we're looking for some kind of a little bit of a retracement back into some form of resistance. And, this 3,000 area is a big deal. I don't want to give you the impression that if we get this set up above 3,000, that it's going to easily just flow right through all that support down there, 2950 and 3,000. I think, odds are you could have a good trade down into that region, especially if ADX is churning on the hourly chart. I think it's worth a shot to see if this thing's going to go and break the 3,000 number. So anyway, that's how I look at it. Please hit the subscribe button if you want to see more content like this, and we'll talk to you soon.